Welcome and what is up there, everybody? This is Casper Trader back here with another video today. And in today's video, we're going to be doing a portfolio review, showing you guys how our portfolio has performed over the last week. And I'm super hyped to talk about this week because we did have a really nice rebound near the end of the week, as you can tell by the stock prices, how much they've gone up on Thursday, which is what Robinhood is showing right now. And we're also going to be talking about the stocks that I bought in the last week, as well as stocks that I'm looking to buy in the following weeks. I did make a little, well, not even a little, a decent sized purchase in the last week, and I'm really happy I did it. I'm going to be sharing that with you guys, as well as the other stocks that I'm looking to buy in the upcoming weeks. So let's get right into it. But before we do, I'd really appreciate you guys could smash that like button below and subscribe to the YouTube channel if you guys have not yet. I'd really appreciate it a ton. Alright guys, so on the day, we're up around 30 bucks, and that's just mostly from crypto. In last week, we're up $1,400 or 11%, so that's fantastic. In the last month, we're up $680, around 5%. In the last 3 months, we are down around $2,700. In the last year, we're up $2,600 or 22%. And as you can see, this is when the prices were just skyrocketing for growth stocks like Tesla and the majority of stocks I was holding. And then the whole correction happened, and now we're finally like stabilizing. Hopefully it's only upward from here. And then overall, we are up around 9%. So as you can see in the last week is basically the reason that we're in the profit so far on our Robinhood portfolio. And let's just keep this green going. Let's try to stay above that break-even line and stay in the profits. So I'm going to be showing you guys these stocks that I did buy over the last week and sort of my plans, what I want to buy, what I want to sell in the next coming weeks, because I do have a few good plans. One thing I did kind of miss out on that I wanted to buy some of is, starting off with the first thing, of course, is Shopify. Shopify did take a massive dip, and I was watching this dip. I was like, wow, this is a really good price. Shopify near $1,000 per share. That is an absolute steal. But at that time, I did not have much buying power in my account, because like right now it says I have 1.2k buying power, but that's simply because I'm farther from the margin call area where I don't get margin called. Meaning if my stocks go up, from what I understand, maybe I might be wrong, but from what I understand, if my stocks go up, then Robinhood sees my portfolio value go up, meaning they're willing to lend out more money to me. So before that, I only had like $100, and I think either I bought like $100 worth of it. Yeah. So I bought, I don't know if this is 2 weeks ago. Yeah, this is 2 weeks ago, but I did buy $100 2 weeks ago of it, and I wanted to buy one last week, like at least $100 of it, but the buying power wasn't there. I probably just had like $50 to $100, so I couldn't really make a move. But hey, it's all good. Maybe it'll dip down again and we could scoop up some shares. But overall, I'm still happy with the position. We're up 3%, around $40, with around 1.3k in the stock. Another stock that I did look into buying, and I actually did buy, and I'm super happy about doing that, is Tesla. And Tesla on Thursday wasn't too hot, like it fell, but I heard over the weekend that they released their deliveries for Q1, and they have beat Q4, so most likely that's going to cause Tesla stock to go up. So we're looking for a pretty nice and green Monday. But overall in the last week, Tesla didn't move as much as like the rest of my portfolio and some other stocks, but green is green, and I'm happy about that. Another thing I'm really happy about is me being able to somehow time this. I'm no fantastic technical analysis kind of guy. Like, I know a few things, but nowhere near to the how professional some others are. I call this complete luck, but I did get in at $601 per share, which wasn't the bottom level. Like, I'm not being like, oh wow, I'm the best because I got in at the lowest level. No, I'm just saying I got super lucky. I'm just an average investor, just an average Joe right here that makes YouTube videos. But yeah, I bought this stock at $601 per share, which I think is a pretty decent price. It was right around here, I think, or it could have been on one of these dips. But hey, Tesla stock has gone up $50 per share since that, so we're currently up on our half share about $25. So hey, I'm pretty happy about that. And adding more to my Tesla position is never a bad thing, because I'm a very firm believer in this stock. And I could definitely see Tesla stock going to $1,000 plus per share by the end of the year. And that's just my conservative estimate because it's on a dip right now, and it was near that $1,000 point just a few months ago in the beginning of the year. So yeah, Tesla, I love this stock, and if there are any more dips, if I have buying power, you already know I'm gonna be buying some more Tesla. Let me know in the comment section below, by the way, what are some of your guys' favorite stocks? Because I know my favorite right now, as of this moment, is Tesla. Let me know your favorite stock in the comment section below. I'll check it out and maybe even invest in it. We'll see. But yeah, that's what we got going on with Tesla stock. Revolve also doing really well and rebounded. Lemonade just sitting where it's at. Upwork, I think I bought one share either 2 weeks ago or a week ago. Yeah, 2 weeks ago at $43 per share. So we're currently up close to 10% on that, more like 8%. Overall, our position is still in the profit by a very nice amount, 110%. And in the last week, this stock did go pretty well, like much better than Tesla. But in the last month, it's still down around 13%. But I'm not worrying. I know Upwork will bounce back up. This is also one of my favorite stocks. I think I should be adding more to this position because I am actually familiar with this platform and I use it / used it in the past. And a lot of intelligent investors say just invest in what you use. And I've heard that from a lot of people who bought a Tesla car and they fell in love with the product. So they're like, might as well buy some shares. They buy some shares at 14x's and they make a crap ton of money. Makes sense. People who use other products nothing else comes to my mind as of now. But oh yeah, for example, I used to use PayPal a lot. I used to do a lot of things business with PayPal. That stock, ever since I started using it, PYPL, I started using it around 2 years ago, like a lot. So you can see that's about, let's see, 2000, right around here is when I was starting to use it a lot. If I had just invested in it, I would have been up by like 3x since then. So I'm a firm believer in investing in what you use. And Upwork is one of those companies that I sort of use. I mean, I do use it, but not on like a daily basis. But from time to time, I do use it and I do like the platform. So I think this is a great call. And a good idea to invest in a company like this. However, the reason why it's not a bigger position in my portfolio is because it already went up so much that I'm not really comfortable buying in more at this price. Since I already know that I'm up so much on this position, I don't really want to risk being like, oh man, it already went up so much. There's not much more upside potential to go because the market already evaluated it for the price that it should be at and things like that. But yeah, that's my opinion on Upwork. I love the company and I definitely want to get some more shares in, but it's not going to be like the biggest holding my portfolio for sure. Then we got ARKG just sitting around where it's at, not doing much. Dropbox finally making some moves. In the last week, it's up 3.6%. And in the last month, it's up 18%. So we're doing pretty well. We're sitting pretty on our contracts, $606 in the profit, or 58%. And these are some really long-term contracts, so I'm not worrying about like the theta decay or anything about them right now. And we'll just see how Dropbox goes because it just like broke above the resistance just a few months ago. Not even a few months ago, a few weeks ago, like 3 weeks ago, above the resistance of around $25. And now who knows where it's heading? Maybe the moon. I'm not sure, but I have around $500 in this stock, and then options I have around 1.6k. So I'm a pretty big believer in this company as well. I feel like it's one of those more slow and steady companies, but on the higher end, like higher growth end. Like it's not a Coca-Cola, but it's not one of those Teslas where it goes up and down 10% in any given day. But yeah, Dropbox, I love this company, and I definitely want to see these contracts continue to go up, and so and as well as the shares. Shopify, we already talked about. Love that stock as well. Tattooed Chef, just sitting around where it's at, not really making any big moves. ACTC, also not moving much. Fubo, this stock I just want to get rid of, but I'm not going to get rid of it at a negative 47%. So I know if I were to sell right now, I bet this stock would skyrocket back to break even. So I'm not even going to play with this. I know I only have like I put in 200, or now it's worth only $100 in it, so I'm not worrying about selling it at all until it gets close to my, at least close to my break-even point or the price that I bought it at. So this one, just want to get rid of it, and just want to get rid of it at a good price. And then last but not least, we've got ARK, and I bought half a share not too long ago, and we're up around 3.8%. I bought it on March 24th, so about 2 weeks ago. And since then, it has rebounded a little bit, and I'm pretty happy about that. I love ARK. I love the company as well. I like their perspective on investing, like investing in innovation, investing in the future, because a lot of like old ways of investing, like value investing and things like that, it's cool and all. I think it can still make you a lot of money, but I feel like now we're turning more towards the age of more just investing in more tech and the more of the future, like companies that can grow massively in the future. Maybe not, they're overvalued as of now, but their growth potential is there. Just something along those lines is what I'm thinking about. And ARK has definitely outperformed the S&P 500 by a lot, so I'm definitely happy about this investment. I'm not planning on selling anytime soon. If something, I'm going to be adding on to this position as long as I have some money to invest. But I need to keep some cash available, because I don't want to get margin called. Because if you have all your money invested, and for example, if the stock market goes down and most of your stocks go down, you have a chance of being margin called. And Robinhood will show this little line where if you go below that line, you'll have a chance of getting margin called. I've gone below that line a few times, and I don't want to do it again, because if I get margin called, I'm going to be forced to sell stocks at a very bad price where like they dip down. So don't want that to happen. So instead, what I'm going to do is just keep some cash available so that doesn't happen, and just invest in things as they dip down and hold them on the way up. So that's my plan for the upcoming week. Just planning on getting some Tesla if it dips down, and Shopify. Let me know in the comment section below what stocks you guys are taking a look at, what stocks you guys are looking to buy in the next few weeks. And that's going to be it for today's video. Thank you guys all so much for watching, and I hope you guys have a great day.